In today's video, it's all about non-farm payroll. Hello and welcome to another ACY Securities Market Update. My name is Alastair Schultz and I'm going to be your host through today's trading journey. Now in today's topic, it is all about NFP and what we are kind of expecting tonight. So I'm giving you a bit of a recap of the last sort of 2 or 3 months as to what's really gone on with the unemployment figures, the unemployment rate, and of course NFP itself. The first thing to have a look at is the US jobless claims. We saw the absolute peak of this very quickly early on in the COVID-19 scenario, where we had more than 6 million people file for unemployment claims. Since then, we've had it trickle its way down, with the lowest being this week at 1.8 million. Still, regardless of those factors, they are huge numbers. You know, having that many people puts us at a total of approximately somewhere in between 40 and 50 million unemployed of a workforce that is really only 130 million in size. So while we are seeing different unemployment rates, it doesn't really quite add up, but there are a number of instances for it happening that way. Now, the next one to have a look at is the non-farm payroll. So while this has a flatter curve and then a bigger, steeper drop, we need to take into consideration that when it comes to non-farm payroll results, they do come out a little bit later, about 45 days later, in fact, than what you do see on the other one. So it is a much longer term lagging indicator. Now, the next one here is the unemployment rate. Now, last time it ended up hitting 14.7%, and it was an forecast for 16%. So it was better than we expected. Tonight, we are looking at a 19.5% unemployment rate, which is what the estimation is so far. But we already know, and we've already heard from people like Steve Mnuchin, who were saying that the real unemployment rate is really well above that and possibly above 20% already, rivaling the Great Depression's unemployment rates. So tonight, what are we really looking for and what are we actually going to expect to happen? My personal view is that we are probably going to match the 19.5% rate. Even if it does go up or below on either side of it, it is still really big numbers and a really high unemployment rate. So regardless of that matter of whether it is better than the outcome or the forecast, it's still not a good situation for the US. Especially now that we're starting to see, not only have we had in the middle of a pandemic, but we've also had all the riots occurring where businesses have had to lock down again, and that has stagnated their ability to actually get up and running yet again. So here is a snapshot of the S&P 500 as to what it looks like at the time I took the snapshot. It was probably about 9 a.m. Australian Eastern Standard Time. Now, if you are going to be trading tonight, please bear in mind that NFP is going to be much later on this evening. It'll be right near the US Open. So it will be important to keep an eye on whatever chart you are looking at, particularly if it is a US dollar pair or perhaps a US based index. It's important to have a look at. Now, the next snapshot I have for you here is of the DXY, or the US index. And we're looking here at what's going on with the dollar index. We have seen it devalue a lot over the last couple of months, and for good reason. We have had trade wars, we have had a pandemic, we have had businesses go into lockdown and shutdown. We have had people losing their jobs. So it's no wonder that we are starting to see the signs of it starting to go through the rest of the economy. Now, hopefully this means that it is going to turn around from this point on, but whilst we are seeing a slope down for the amount of unemployed, the fact remains that all these numbers are closing up together. So even though you've got less, maybe we're running it to the peak, we've already had the peak of it, but nonetheless, you keep adding them together and that number is still quite large. And it's going to take a long time for the US to really get back on track. So let's keep an eye on what's happening there. Now, for tonight, obviously, the only news that really should be taking your concern is non-farm payroll. We also have Canadian non-farm payroll going out as well. So if you are on those oil contracts or perhaps on the Canadian dollar, then please keep an eye on that one as well. Naturally, I think the move for tonight is going to be if we do hit 19.5%. If it is above, then you have to have the expectation that it is likely going to devalue the US economy a little bit and that it might end up being well and truly closer in the terms of realized GDP and the realized unemployment rate as to what's going on a bit further down the track. So we'll hopefully hear from Steve Mnuchin close to the time. Perhaps we'll hear from him tomorrow or even over the weekend. Certainly keep that on your radar because it might affect markets on Monday morning or Tuesday morning as well. Either way, that's all I have for you today to really have a look at. If you want to get more content, then please feel free to like and subscribe to this video. And of course, this afternoon, I'll be on the Pulse live for AusBiz TV. So if you do have any questions about any of the content I've covered today, perhaps it's about the content that I'm doing on AusBiz, or perhaps from one of the many other type variants that we have here at ACY Securities, please feel free to shoot me an email at talktoal@acy.com. And of course, as always, have a great trading day ahead.